Ms. Kedwai, you are on the board of various startups and you look from a private equity point of view. How do you look at private capex? Is it moving to newer sectors and moving away from the traditional ones?
I think the traditional ones, it's all about, as Anand said, about capacity utilization. If it's sub 70%, why would you be investing in new equipment? So to a large extent, it is about demand. New sectors don't have that issue for obvious reasons. They're new. They have to set up a plant. And fortunately, we are seeing that across some of the engineering sectors. We're seeing it in auto. We're certainly seeing it in the startup sectors are largely tech-driven, tend to be quite asset-light. And maybe that's a cause for reflection for us, that our growth is coming more and more from asset-light industries. And maybe looking at private capex is something that we don't have to worry too much about, simply because the model itself is changing, as in new industries are just different in the way they're set up. The electronic sector initially is all about assembly, requires lighter capex. As it goes deeper into manufacture, which is our hope, expectation, push, we will begin to see that expenditure. But it is something which the government is clearly focused on. And I do hope that for old industry, we see that capex investment cycle come back in. If you look at the industries India's strongest at, though, IT, pharma, I mean, there's been no slowdown therein. We will continue to be exporters to the world. Our strengths continue to remain there. If at all there's an issue, it is with what I will call the old industrial model. But even there, and I'm familiar with the cement sector, sector which is growing enormously in India, and it benefits from the whole real estate cycle as well. The changes are going to be about input. And I've been to a plant, for example, in Greece, where 90% of the energy is waste for energy. It's sewage and plastic waste, landfill waste. Think of what we can be doing in our country if we can innovate without even having to innovate for ourselves, but just learn from what the rest of the world is doing. In terms of production of cement, costs would go down because we're using waste for energy instead of expensive fossil fuel. So there's huge room for improvement, and that will not require a new cement plant or a new furnace. So I think we have, maybe looking at capex per se isn't the right thing. We have to look at how we can produce more cheaper.
Anand, one important issue which we haven't discussed is the India-US trade deal. Where are we on that, and what is the industry looking forward to from the government on that?
I think there's still lack of clarity on the US side. So I think there are Supreme Court decisions that are taken. Even if India and US were to agree on a trade deal at this point of time, will that tariff prevail or not is unclear. So to that extent, we are at a 10% tariff, which got revised sometime about 10 days ago or so. So so I think first, I think that has to be solved. And I think the other thing is, what I understand is that we have to be competitively better than...
It's a new narrative that we have started, right? So, in saying that we need to be competitively better than our,
our neighbors, China, Asia, etc. So I think that part also is something which is unsettled. So I think once there's some more clarity that emerges, I think we can look forward to a trade deal. I think until then, maybe we will be where we are at this point.
Mr. Khorakewala, competitively advantageous position is what India is seeking for this trade deal. What would be that for the pharma industry?
I believe from a pharma industry, because the level of our penetration for pharmaceutical products in USA is so high. In fact, 45% of prescription written in USA comes from products manufactured in India. So irrespective of tariff, the one thought I have is it's the American consumer is going to pay. Because to create similar facility in the US, it takes minimum 3 to 4 years.
By that time, we have a next president coming in.
And more importantly, cost of manufacturing would be 3 times. So it's a zero-sum game for the US to either get it manufactured there or put a higher tariff. It's only American consumers will pay.
Mr. Somani, from the FTA's point of view, we have signed a couple of FTAs. What is the kind of market opening that it gives to the Indian industry, especially your ceramics?
I think the FTAs that we have signed are quite significant, and there are some bigger ones even coming, like Europe. If you take our share in major industries, our export share of the global trade, in most industries export-oriented, even things like textile, we are 2 to 4.5% of global trade. That's it. So we have a very small position. I think these FTAs will help Indian exporters lower their landed costs to their consumers and will open the doorways for them for a much more competitive positioning in their countries. I expect that these FTAs will add to Indian exports significantly, particularly in areas where we have strengths and where we have low-cost manufacturing. So it will definitely give fillip to our, for example, our footwear industry, our textile industry. I'm not even talking of pharma, because pharma is already a very successful industry. We have severe, large penetrations in many markets, as Mr. Khurakiwala was saying. But in industries where we are less penetrated, I think the FTAs will help significantly. And the type of FTAs, I think this time, is far better than the quality of our earlier FTAs signed many years ago. This has been done after discussion with industry. So a lot of the industry's inputs have been taken by the government and acted on. And I think it's now the onus, the government has done its part and implemented the FTAs one by one. I think it's for industry to take up the challenge and actually make sure that export share in those countries and economies go up.
Mr. Gandhi, is that a big opportunity for animal health care? Because while generics is doing a big thing, they're already out there. Animal health care can India be the maker of animal health care for the world?
India has a good prospect as far as health products and vaccines both are concerned, and I always get down onto the vaccines discussions more than the health products, because that's what we are in. Yes, health products, we could have a little advantage, but these FTAs are not going to give us a leap of a jump or something of that. As far as vaccines are concerned, even the FTAs are not going to be so impactful, because the non-tariff barriers on exporting or importing biologicals are much more higher than the tariffs, because you have microorganisms which are not allowed in those countries. They don't have certain diseases, or they have disease with another strain of the same virus or the bacteria. So per se, the FTA wherever, with whichever countries we do, it would not have a very great impact as far as biologicals is concerned.
It's a Panda, but for you, ferroalloys, it could be a good opportunity?
So, yes, it is, because, see, I want to dwell on one other aspect of FTAs. As Sandeep mentioned, I think, what FTA gives us is access to, us as in the country I'm talking about, gives us access to newer markets. It's about give and take. But I think, the other element of FTAs, which have been very well negotiated, is that nowadays it's not just about market access. It's also about investment. It's about technology transfer. It's about, it's about a full bouquet, if I can put it that way. So, from that point of view, and there is certainly far more thoughtfulness going into FTAs. So it's not a question of just blindly signing an FTA, but making sure that Indian interests are protected. And of course, FTAs are always about give and take. So you'll have to figure that out as to how that can work. But the onus, as in fact even the Commerce and Industry Minister has said, the onus is now in industry to act upon it. The government has done what it could have done, which is to negotiate well thought through FTAs, which involve investment, which involve technology transfer, which involve market access. Now it's up to us to act upon it, and I believe in a large number of sectors we are, and a lot of these FTAs which have been given effect to, have review mechanisms which will in due course throw up the data to suggest that we have benefited from it. Unlike some of the FTAs in the past, which we found out to our regret 5 or 10 years later that it had not quite the effect that was intended. Specifically, as far as ferroalloys is concerned, yes, some of the treaty with South Africa, South Korea, which has been in place for a while, is I believe currently been renegotiated and all of that. But that's where we are a large, we have a joint venture with POSCO, we have large exports to Korea, etc. But by and large, I think one needs to look at the industry-wide impact.
Final word, Anand. What is one concern or headwind that you will watch out for the industry?
I would say in the near term, El Nino, that's something where weather patterns can really affect whether it's demand, agri, that space, and it has a substantial impact on a large number of people. So that's next 2 months still has to play out, and we'll get to know then.
And medium term?
Medium term, I would say the logistics challenges and supply chain with respect to the uncertainty with respect to the war.
Okay, gentlemen and Ms. Kidwai, thank you very much for joining us on this CEOs Roundtable. Thank you.